When you're looking at the Japanese economy, is there a trading opportunity or investment opportunity at the top of your mind that you want to tell us about?
This part, it doesn't matter if the country is a outperformer or underdog, as long as there is movements in the market, there's volatility, there's a clear trend of where things are going, either in a clear uptrend or downtrend, either in a clear sideways trend. I think it presents really good opportunities. What I do at Phillip Nova is I'm a forex strategist, so I look at the currencies market very closely, and whenever we talk about Japan, one thing comes to my mind instantly is the Japanese yen. So the dollar-yen currency pair is a really popular currency pair that people would trade, and it really presents a lot of trading opportunities for investors, for traders from all over the world.
What are some of the recent drivers for the dollar yen?
The dollar has been on a pretty steep downtrend since the start of the year. The US dollar has been depreciating, and the Japanese yen has been strengthening against the US dollar. So maybe let's talk about the US dollar first. At the time of speaking, I think it is the time where the tariffs imposed by US President Donald Trump, I think it's being rolled out, and there is this mounting fear about the global trade war happening. And at the same time, the US economy is also seem to be performing not so well, with the inflation figures coming down, with also the employment figures coming down. So I think the entire sentiment among the investors is that they are quite fearful of a potential recession happening on the US economy, and therefore we see the depreciation of the US dollar. The Japan economy has been experiencing continuous inflation. Okay, so it is somehow what the Japanese government was trying to achieve. Okay, the inflation has been coming up. Bank of Japan has already begun increasing its interest rates since the start of last year. So basically, they were in a long period, about 17 years of negative interest rates, and they finally exited last year. Okay, and based on the current trajectory of the Japanese inflation rate, the Bank of Japan governor has also expressed their stance that they are open to keep increasing the rates, to hopefully someday move the Japanese interest rates to a neutral level, because currently the rates of where the Japanese the BOJ's rates are, it is still highly accommodative. So they would be moving it to a more neutral kind of interest rates, as long as the inflation rate proves that it is sustainable.
So how do traders typically react to these market fluctuations?
A lot of traders, when they start trading, right, they will learn a lot about many different kind of technical indicators. And then a very typical way to know if someone is new in trading is by looking at a chart. If they have too many trading indicators, probably they may be novice on, they are still trying to figure things out. A lot of long-time profitable traders that we speak to, ultimately they don't really use too many indicators. They only focus on chart patterns, or what they call price actions. And one of the key technical indicators that traders will still use would be the exponential moving averages. Exponential moving average, or rather the EMA trading strategy, is a trend following strategy where it tends to work well when the market is trending. Put it simply, what is an exponential moving average, or rather what is a moving average? It is basically a line that smoothens out the price movements of a certain period in the past. So let's say if you're looking at a 20-day moving average, so what that line represents today, or the point that it represents today, it is the average price of the past 20 days. So that line would just be a smoothen out trend of the price, and what it does is really to give you a clearer look at where the prices is going. It cuts away a lot of the noises, and people don't normally use such moving average on its own. They normally use a few kind of different period moving averages. So the 20 exponential moving average is one, and people often use it with the 50 EMA as well.
20 and 50.
20 and 50. And on a market that is clearly trending, these EMA lines would tend to serve as a support level for the prices. So let's say if prices are going up steeply, right? If it comes back down and it touches the EMA, it would tend to bounce off. So traders could look for such interactions and then to place their trades accordingly.